Yeah, so my name is Scott Reynolds. I'm with the Reynolds team here at Compass, and I'm talking with Don Schweikert with Premier Mortgage. We were just talking about something I wanted to get on camera about was how the Fed rate went up again 3/4 of a point. And what did mortgage rates do?
Mortgage rates went down.
Which is weird.
I know. We were quite surprised, but
I thought, so my 2 cents, and that's why I was asking Don, this is just a real candid conversation. My 2 cents with it was that the mortgage companies had pre-baked in all the different rate expectations back in March and April, where they were even around 6%.
yeah, June our rates hiked up into the sixes, and that was in anticipation of the Fed's increase of the interest rate. So that actually happened before the Fed made the rate change in June. But the market knows that they know where the economy is. They kind of see this, and it was expected. That was the other thing, is that the 0.75% interest rate increase was expected. So the mortgage companies have really pretty much baked that cost in. So that's why we didn't see a sharp increase in mortgage rates on Wednesday.
And the Fed rate has really nothing directly to do with mortgages.
That's correct. I know we hear on the news that when the Fed raised, I watched the news on Wednesday evening, and I was a little frustrated because they kept saying how it was impacting mortgage rates. Well, it doesn't have a direct impact on mortgage rates. It has an impact on the bond market. And it's not a direct impact either. It's when the Fed moves the rates, whether the stocks and bonds, how they trade, how the coupons trade. So mortgage rates are based off of mortgage-backed securities, which is a bond. So that's why it does not impact. It does have a direct impact on credit cards, car loans.
Short-term loans.
Home equity loans.
Right.
Home equity loans it has an impact on.
I was in Bank of America, and I saw the HELOC was like over 6%. I mean, there's just advertised right there on the front door.
Right.
6 and a quarter on
6
a HELOC.
and a quarter, yeah. That's where and that's pretty much because it's probably New York Prime plus whatever that bank's margin is, because New York Prime is one of the rates that are affected by when the Fed raises the rates.
But the good news is that the mortgage rates have went down, and I don't have the exact times, but pre-pandemic they were floating around in the high 4s, and now depending on the lender and the buyer's circumstances, it's in the lower 5s, which is really not too far off from pre-pandemic, which I'm dating somewhere in the fourth quarter of 2019. So what does all this mean? I think the one thing I would take away as a buyer is you have a little bit more buying power than you did just as little as 90 days ago or 60 days ago, right?
That's correct.
Even
30 days ago.
Okay.
Because when the rates had gone up into the 6s, I mean, that could cut a couple $100, of buying power per month from a borrower's qualifications. Well, now with the rates sliding back down, those borrowers are now able to get back into that price range that they were looking for before.
And as we're headed into more of a normal market, before the buyers had to give, there were multiple offers, there were 20 showings the first week. They, all kidding, kind of kidding, not kidding. The buyers had to give their kidney, the $50,000 over asking price. And so all that is really a thing of the past, and unless the property's just really, really underpriced, then they may create an auction-like atmosphere. But we're still seeing multiple offers. We're just not seeing the feeding frenzy, and it's actually it's a lot healthier, where buyers can buy with confidence and be able to look at multiple properties. The other nice thing is that there's more inventory that has come on the market. At the all-time low inventory in Indian River County, we had 285 homes available. That's all price ranges. And now we're up to like 685, as I just checked before we got in here.
Wow.
So that's good. Normal market was 1,600. Wow. So we're still a third of the inventory. And it really feels like we're starting to get into that seasonal, like, it's August. A lot of people are on vacations. They're now able to travel to Europe and do some of the things that they want to do, go to California, go to the mountains.
Right.
So we're seeing some seasonality adjustments in not only in, the buyers being a little concerned about interest rates and things like that, but also getting back to normal life. And it's August and it's a little quieter here, but it's busier than it was in same summer of 2019.
Yes.
Population's just grown a little bit.
Yes.
So as a seller, I wanted to take what does this mean to a seller? And as a seller, we're currently seeing days on market stretching out to be a little bit longer. Again, going back to normal. We're starting to see less showings, which is okay. And then we're also seeing price reductions. Some sellers have taken the last sales price and added quite a bit, and the market's not ready for that. So we're not seeing sales prices decrease or anything like that. Just slowly uptick. So that's kind of what we're seeing from a seller perspective and traffic at the home. I did want to bring up a point that on the buyers about if they wanted to lock in on the lower rate for now, do you guys have a program where they can lock and shop?
Absolutely. We do have several lenders that have a lock and shop program to where you can lock the rate for 90 days or longer, depending on which option you choose, but you can lock it as a minimum of 90 days. And if that rate does go down, we can renegotiate the rate lock. So there is an option to where if you want to secure that rate, then we absolutely can do that before you've found a property.
So that's something that's really key if you're hot in you're in the current market to buy. Then that's really, because right now we're at a current low and it could go up. I mean, everything's been going up and down. So if you're currently in the market to buy, you're going to end up buying here shortly, locking that rate in so you can shop with confidence. So
another thing a buyer can do too is when you're negotiating, you can ask the seller to help give you contribute toward the closing costs to cover points if you wanted to buy your interest rate down.
Right, and points will help buy the rate down some.
Correct.
So now this is probably a little nerdy, but like 1 point is like 1% of the sales price?
Of the loan amount.
Of the loan amount,
Yep,
that's right.
1% of the loan amount.
Okay. And that sometimes will buy anywhere from a quarter or the rate down or something a little
Exactly.
less.
It's not bringing it down 1%. It's not bringing the interest rate from 5 to 4.
It just costs.
But right, exactly. It's just a cost that can help bring it maybe from 5 to 4.75. So, and that could make a difference in that will make a difference in the borrower's payment, and it might be enough for that borrower to be able to comfortably afford that home.
Or if it's with it being a long-term purchase, it could save money over the life of the loan.
That's right.
And instead of negotiating the sales price as much, get like a little bit credit towards that depending on what the borrower's needs are.
Yes.
Needs or wants. So
one thing to make a point is that for every $1,000 borrowed, it's $5 a month. So if you have a buyer negotiating with the seller and you're $5,000 apart, $5,000 may sound like a lot, but it's really, in a monthly basis, you're only looking at $25 a month in your payment.
Wow, good.
Something to keep in mind.
Well, it was kind of weird to see the Fed rate go up and mortgage rates go down, and I want to just jump on here really quick and do a quick video with Don on what does it mean to a seller. And we definitely want to talk about the buyer side of it, but on the seller side, if you're really thinking about selling, right now is a good time. This is the market we know what the current conditions are. And we have less than 6 months of inventory. Right now we're right around 2.5 to 3 months of inventory. And anything underneath 6 months of inventory makes it a seller's market.
Yes.
That's now is a good time. If you're not in the market to sell, obviously it doesn't even matter. A lot of this doesn't even matter. So if we could be of any help to you, all of our information is going to be below. You can email or call, text, and I'll have both your information and my information below. So thank you so much.
Thank you for having me.
Oh, you're welcome.